morning, welcome back to the Forex Lounge Fundamental Extras. Today is Thursday, April 22nd, 2010. Welcome back one and all, great you could join us. Well, today Bloomberg.com reports wholesale prices in the U.S. rose more than forecast in March, boosted by higher costs for energy and the biggest gain in food since 1984. The 0.7% increase in prices paid to factories, farmers, and other producers followed a 0.6% drop in February, the Labor Department said today in Washington. Excluding fuel and food, so-called core prices rose 0.1% for a second month, restrained by cheaper autos and appliances. Now, getting to the chart to see what this looks like, we're talking about referring to the U.S. Producer Price Index, the PPI, which measures a basket of goods or services at the producer level. And once again, today's report indicates a 0.7% indication. As we can see here by the blue line, the violet line represents a 12-month moving average of that indication. So the PPI is above its 12-month average, again 0.7%, following a negative 0.6% in the month of February, showing an increase. And generally speaking, as inflationary pressures continue to return to the market, as prices go up to the consumer, well, we would expect naturally the Federal Reserve would one day raise interest rates. Now, compare the PPI, which is a producer price index, that's the violet line, to the blue line, which is a consumer price index. That measures a basket of goods or services at the consumer level, and it is believed that once the producers start paying more, they will pass those extra costs on to the consumer. So as we can see, generally speaking, as the violet line, the PPI goes down, the CPI then follows to the downside. Lately, as the PPI has been rising, we would expect naturally that the CPI, the consumer price index, would rise as well. Now, compare the PPI in the U.S., Producer Price Index, that's the blue line, to the Dow Jones Industrial Average, that's the violet line. Generally speaking, during times of economic strength, as the Producer Price Index rises, the Dow Jones Industrial Average rises. As the Dow Jones Industrial Average falls, reflecting a weaker economy, the PPI goes down as well. However, lately we can see, actually going back all the way to February 2009, just a little over a year ago, the PPI has been rising. The Dow Jones Industrial Average has been rising as well. If we see the PPI continue to rise to the upside, we would naturally expect the Dow Jones Industrial Average to rise to the upside. This also has a correlation in the foreign exchange market. The violet line represents a dollar-Swissy currency pair. The blue line represents US PPI. So, as the PPI, the Producer Price Index, rises, this naturally would lead to a rise in the Consumer Price Index, more inflationary pressure. And eventually, as we anticipate the Federal Reserve to raise interest rates as a response to higher PPI and CPI numbers, we naturally would expect the dollar Swissy to rise as well. However, we should mention it's not a perfectly fair comparison, as the dollar Swissy represents two currencies within one pair. However, over the long term, we can see during economic times, during strong economic times, as the PPI rises, the dollar Swissy tends to move up. And when the PPI goes down, the dollar Swissy goes down as well. If we think the dollar will rally, we want to see this PPI continue to rise to the upside. If you have any questions, you can email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.